Hi, welcome to our latest podcast. I'm Charlie, I'm a member of the accounts team, and I'm currently studying towards my chartered qualification. Today, I'm joined by Helen, the manager of the sole trader team, and Francesca, who heads up the payroll department. So there's a little bit of a swap today, because as we start the new tax year, now is a perfect time for us to discuss payroll. The changes that are implemented from the new tax year, how these can affect employers as well as employees, and covering other subjects in between. With the start of the new tax year, I would say the main thing on an employer's mind at this time of year would be the rise of national minimum wage. Francesca, would you like to start us with these rates?
Yeah, I certainly agree. The start of the tax year does always bring up the conversation that national wages are increasing. They increase every year, and obviously the government sets them increases. It's always released in the autumn budget back in the November time. So it does give employers that chance, 5 months to almost prepare for that national minimum wage increase. I'll run through the rates, but obviously no one has to remember them. So apprentices, they're going from £7.55 an hour to £8 an hour. 16 to 17-year-olds, they're again going from £7.55 to £8 an hour. 18 to 20-year-olds, they have the largest increase of 8.5%. So that's going from £10 to £10.85 an hour. And then 21 and above is going from £12.21 to £12.71. So, for example, the 21 and above, that's only 50 pence, but I think it's about 6%. So these increases, they are slowly creeping up every year. I know the previous tax year, the 16 to 17-year-olds, I think went up about 16%. So it is a big jump.
It's a big increase, isn't it?
Yeah, definitely. And it's a big thing that employers need to consider. They have to implement them. It's part of what having been an employer, it's part of having staff. But obviously, it just leads on to the fact that employers then have to look at their costs and what they're charging for their service. And obviously that's where all these increases are coming in.
Is there anything else that needs to be considered when it comes to national minimum wage?
Yes, there definitely is. So a lot of people think, the minimum wage is just what you're paying someone an hour, but it isn't always that. If you're having meetings outside of a standard shift or the standard day, that also needs paid, as that would come into a national minimum wage calculation if completed by HMRC. Other things such as training, that comes into it as well. And I know one that often catches employers out is salary sacrifice calculations. So with the salary sacrifice, if an employee is sacrificing part of their salary, the amount they're left with after that sacrifice, they still need to be able to be paid above minimum wage. So essentially, if you're being paid minimum wage, you can't sacrifice your salary.
Yeah. So with the increases in national minimum wage being a main consideration for business owners, a calculation done by our team showed that an employee receiving minimum wage and working 37.5 hours a week would cost employers an additional £1,154 per year from April 2026. Helen, what are your thoughts on this?
Well, I think it's important to consider that it's not just your gross wages that increase. You've also got your employer's national insurance on top of that, and you've got your pension contributions as well, your employer's pension contributions. So that calculation that you've mentioned there, that does consider those extra costs.
Yeah.
I think when you're hiring staff as well, it's not just a case of looking at what you're offering them as a salary. It's actually having a look at what's your employer's national insurance, what's your pension contributions. Employer's national insurance at the moment is on 15%. Pension contributions, minimum of 3%. Yeah. So it is a lot extra. It's not just that gross salary that you're offering.
Yeah, exactly. Well, another thing that a lot of people notice when checking their payslip at the start of a new tax year is a potential tax code change. Francesca, do you want to go further into this for us? What employees might expect to see, why it might happen, and how to check if this is correct?
Yes, certainly. So with payslips, obviously every payslip you receive, every pay period, will show the tax code. The tax code is what determines how much tax-free pay the employee has for that employer. And then obviously that's how the tax is calculated. A lot of people see a tax code, and a standard one is 1257L, which means that you have £12,570 tax-free before you're obviously paying your tax, whether that's at 20, 40 or 45%. For English rates, Scottish rates do differ, and at the minute the Welsh rates are the same as English, but obviously can always change going forward. But what a lot of people think is that as soon as it's not 1257, that it's wrong. It's not always wrong. You need to look at that individual circumstance. There's a lot of things that can go into a tax code that I think people don't often realise. It can be increased, your tax-free pay, it can be decreased, and that generally depends on everyone's individual circumstance. One thing to remember is just because it's been sent by HMRC to the payroll provider doesn't actually always mean it's right. So HMRC are basing them tax codes often on estimates as it comes to the start of the new tax year because they've only got that small amount of data that they've received.
Sometimes they'll base them on a previous year, won't
Yeah,
they?
so if your circumstances change massively, well then it could be worth getting in touch with HMRC, seeing what information they're basing that code on, and then even updating that information. Because I always say HMRC and the tax codes they provide can only go off what information they're given, whether it's from employers, whether it's from self-employed. They can only go off what they've been given. So they're from somewhere. Whether or not it's the most up-to-date information is a different story.
Yeah.
Because I know me and Helen, we've looked at a lot of things where you can get different allowances on your tax code. Certain trades can get certain reliefs, but that's a case of applying for them through HMRC. Different trades can get different things, and different trades have different amounts.
Yeah.
It's nothing set in stone.
So it is quite complicated then for employees.
Yeah, it definitely is. And a lot of people think, it's the payroll provider's fault that my tax code's been changed. And they'll say, why have you changed my tax code? Again, it's nothing we do. We can't change tax code because we want to change it. It's an employee's. Changing a tax code has a big effect on employees' pay. That is essentially what can affect the net pay that they receive. So we would never go in and change a tax code. There's always a reason.
It has to come from HMRC, doesn't it?
Yeah,
really?
it's always come direct from HMRC. And obviously that goes off the information they have. Again, it might not always be correct. Sometimes HMRC will update a tax code because they have the wrong estimated earnings for the year. And that's again why, as an employee, it's good to have a personal government gateway that allows the employee to gain that information as to where the tax code comes from. There's a lot of things that can get involved in the tax code, and it comes down to each individual circumstance.
Yeah.
And it's keeping an eye on it, making sure that you think it is right, isn't it?
Yeah, definitely. You can tax code can change every pay period if your circumstances changed every pay period.
Yeah.
So it's important that you get your pay slip every pay period, you're checking it over, you're checking it's correct. And if it's not correct, as an employer, as a payroll provider, we can't change that. The employer can't change it. That does come down to the employee. And it comes down to the employee taking a bit of responsibility for their tax code, looking into it. As a payroll provider, we can say to them, your tax code has changed. I suggest you have a look at it. But that employee needs to get in touch with HMRC, confirm it's correct, because not all employers as well have a full understanding of their employee's situation. Because there's things like interest can be put on the tax code if you're receiving
expenses,
over the allowance.
Kind and things.
Yeah, expenses.
Lots come into it, doesn't it?
Yeah, definitely. I mean, for example, certain trades might have 5 employees under one employer, but not all employee will claim this allowance that they can receive, because that's the employee's responsibility that they need to take on whether they can get that allowance or not.
Yeah. So we have talked quite a lot about employees there, but is the situation the same for directors or really anybody that's self-employed?
Well, yeah. So obviously the self-employed, you might get people that are self-employed and employed as well. The ones that we complete tax returns for, we'll keep an eye on their tax codes. And different to what Francesca's saying about employees, how we can't speak to HMRC and get those tax codes updated. For the ones where we have HMRC authority, for the self-employed people, we can actually discuss those with HMRC and we can get them amended if we think they need amended. So it could be a case of they've got expenses going through their tax code that's based on a previous year, but maybe this year they don't have expenses. When we then come to complete that tax return, it is going to have an effect on their tax. So it's best to get that tax code right earlier in the year so it doesn't affect the tax that they've then got to pay later on.
Definitely. Yeah. Thank you, Helen. Francesca, are there any other changes that occur at the start of a new tax year that people should probably be aware of?
Yeah, there is. So as every year, there's always changes. Again, often released with the autumn budget back in November, which does then give employers time to understand the changes and what that means for them. One of the main changes that has been talked about for quite a few years actually, and now has come into play, is sick pay. So at the moment, statutory sick pay has a 3-day waiting period in that you're not paid for, and then the statutory amount kicks in on the 4th day. The change now is the statutory sick pay amount kicks in from day 1 of sickness. So that's going to affect a lot of employers. No one can help being poorly, no one can help not coming into work. But whereas previously if they were off for one day, well, it's unfortunate and they wouldn't get paid. Whereas now that's coming out of the employer's pocket. I think a lot of people don't understand as well is that sick pay is coming out of the employer's pocket. So other statutory payments, maternity, paternity, bereavement, shared parental, they're all reimbursed by the government, but sick pay does come into being paid by the employer. They're not reimbursed. It comes out of their pocket. So that's obviously a big cost. Changing it from 3 days unpaid to none, again, is another big cost they're going to have to consider. So another change at the moment is the parental pay. So parental pay, previously, you essentially needed to be employed for the full length that your partner was pregnant, whereas now it's a day one right from employment. So basically, if the partner who's going on paternity leave starts a new job and then a month later their partner gives birth, they're going to get that paternity pay, which is obviously 2 weeks statutory.
Yeah, it's quite a big change, that, isn't it? Because it was quite a few months prior.
Definitely, and it definitely caught a lot of people out. I saw it in my job. Employers were coming to me saying, oh, I've had this lad with us 6 months, his partner's gone into labour. And I'm saying, oh, I'm really sorry that they're not entitled to paternity leave. And that's no fault of that parent's choice to change job. You wouldn't have thought it would affect them, but it does.
Yeah. So there are quite a lot of changes then, and it's important to note that all these changes that are brought in from the start of the new tax year, they're not always software automated, and they do require the knowledge and the experience to ensure that these are implemented correctly. Would you agree with that?
I 100% agree, Charlie. A lot of people think that payroll is just another admin task that as an employer you need to do every pay period or every other week or every other month. But it absolutely isn't that. There's a lot of things that come into the background of completing payroll for your employees, which is where us as payroll providers can really come into play with it and really help our clients and other employers. So with the payroll, we'll do your starter to end, we do your starters, your leavers, your general people that stay on all the time. But there's a lot of things that come into it, such as with your starters. Have you got all the information that you need to then submit this to HMRC? Have you got correct year-to-date information provided from the P45? Have you transferred the tax code correctly? Because things like that can then affect the employee more than just the employer. And again, that's where if it's wrong, then you're going to lose trust on that employee because they've given you the information, but have you dealt with it correctly as you should? When it comes to things like leavers as well, have you prorated the pay correctly for that pay period? Have you check the holiday calculation? Have they accrued too much? Have you overpaid them? Do you need to pay them the remaining? And all again, that comes into the fact that that type of issue is going to affect the employee. You don't want an employee to leave on bad terms at all. No one does. But things like that, having us do a payroll, they're things that we consider every day. Whereas if you're doing it yourself, that's maybe something you don't consider as much, because it's not your daily task, it's an admin task is what you're seeing it as. Other things that are involved with the payroll team is completing the RTI submissions every week, every month, every pay period, completing the EPS submissions, so their employer payment submissions. They need to be sent every month. That's how you would reclaim any statutory payment.
There's a lot of compliance and deadlines as well, isn't there?
Yeah.
Kind of making sure that everything is submitted on time. And
yeah, definitely. So obviously EPSs have a deadline of the 19th of the month. Your RTIs need to be filed on or before the pay date of that employee.
Yeah.
There's things like your pension regulations that you need to comply with. So every 3 years you need to do your pension declaration to the pensions regulator. That's something we would look after. But if you're seeing payroll as an admin task and thinking you can do it yourself, are you doing that on time every 3 years? Because every 3 years you've probably forgot about it, but we would keep track of them deadlines. Again, it's another deadline we keep track of. We're more than capable of doing that. We have all that information to our hand, but they're the type of things that a lot of employers would miss when doing their own payroll, because they're seeing payroll as an admin task to pay my staff.
Yeah.
I suppose if there's errors as well, then not only are you maybe paying an employee incorrectly, you've got errors in your HMRC liabilities as well.
Yeah, I agree. And
then that could lead to interest.
Yeah,
and
definitely.
other
So obviously
problems.
if information's going out wrong or pay's being made incorrectly, needing amendments, the information HMRC is receiving could be incorrect.
Yeah.
The payments you're making to HMRC
Yeah.
could be incorrect. Again, leading to incorrect interest being added. No one wants interest added to a payment when it shouldn't be. But yeah, no, there's a lot to consider.
Yeah.
And again, if information is going incorrect HMRC, you open yourself up to a bigger liability of a HMRC compliance check. If you're seeing payroll and doing it yourself as an admin, do you then have the time to complete that compliance check? Or whereas us, with that, we have the constant communication with HMRC, we can keep on top of it. So it's slightly different. A lot of people see payroll as a general admin task, but it isn't. There's a lot
so
behind
much
it.
more to it, isn't there?
There definitely is. With
Yeah.
everything that we do, there's
Yeah.
always a lot more than the employer realises until they speak to someone with that expertise, with
Yeah.
that knowledge.
Definitely, yeah. So there is a lot to consider with that.
Yeah.
Then it's not just some kind of simple thing you can do at the end of a pay period on a Friday afternoon.
No.
So as a general rule, would you say that outsourcing your payroll to a professional is probably more beneficial to a business?
Well, I would, yes, obviously.
Yeah.
We have that knowledge and we are doing the job every day, Monday to Friday, 52 weeks of the year. We have that knowledge. We have the time to then expand our knowledge in that certain area. Whereas, for example, someone working in construction, they're not going to want to spend 7 hours a day looking further into payroll. They want to do their job
And run their business.
and run their
Yeah.
business.
Yeah.
And using, for example, outsourcing your payroll then takes the time you would have to spend either looking into something, dealing with HMRC, making sure all your submissions are sent, doing their job, which is what they're getting paid for by their client or their customer.
Yeah, exactly.
Yeah.
Well, thank you both for joining me today. I think the main thing to take away from this is that payroll isn't actually as straightforward as it's made out to be. And when it's not done properly, mistakes can be made, employees can lose trust in their employers, and HMRC might even get involved, and you don't want that.
No.
Don't.
So, as always, if anybody has any further queries, please don't hesitate to get in touch with the office and we'll help where we can.